When you think of a bank that's been growing its profits, unlike most banks, which bank do you think of? Well, I think of Auswide Bank, ABA. That comes to mind. It's Australia's 10th bank on the ASX and has outperformed its regional peers, Suncorp and the Bank of Queensland, based on share price performance year on year and over the past 5 years. It's also backed by Bell Potter as a buy. I'm Jessica Amir on behalf of Bell Potter, and joining me today is the CEO of Auswide Bank, Martin Barrett. Martin, thank you so much for your time.
Thank you, Jessica. Great to be here.
So let's start with the introduction to Auswide Bank. What sets you apart from the other regional banks?
Auswide Bank started as a regional bank, but over the years it's grown to be a national bank with its products and services supporting customers all over Australia, either via broker network or via partnerships or via customers that find their way to us and like the services and the products that we offer. We see ourselves as being small but nimble, and we see that as being something of a strategic advantage, particularly at a time when organisations can be so complex, so big, and customers can find that really, really difficult to sort of navigate. We pride ourselves on that simplicity and that ability to be able to get to opportunities quickly. So we look at partnerships, so we look at ways that we can improve our broker experience, our customer experience. We jump on opportunities like First Homeowner Scheme very quickly and take advantage of those offers in the marketplace where we can perhaps excel, grow our business whilst supporting customers.
And you mentioned the business is quite nimble. That nature saw you announced first half results that were quite strong. Net profit up 9.3%. You've just wrapped up the full 2020 financial year results, but we aren't expecting your results until August. But given the ASX disclosure limits, what can you tell us? What can we expect?
We entered into this second half with a great deal of momentum. And despite the fact that there have been some obvious challenges with COVID-19, that momentum has carried forward through the half year. So that's quite pleasing for us. We put out a series of outlook statements at the end of our first half, and those outlook statements were really four things. One, we expected our net interest margin to be improving over the second half. We expected that we would see above system loan growth, albeit system loan growth is quite low given the environment. We also expected that our return on net tangible assets would continue to improve, and in the medium term we were working towards a 10% return on net tangible asset goal, and we were targeting a cost to income ratio of 60% again over the medium term. We have no reason to change any of those outlook statements, Jessica, so we continue to be on target to achieve those statements.
And you mentioned COVID-19's impact. We know the big four banks have been significantly impacted by COVID-19, increasing their write-downs and provisions and increasing costs because of loan impairments. But what are you seeing?
Yeah, similar to pretty much everyone in the banking sort of sector, we've extended to our customers a range of support packages to ensure that our customers can kind of get through this very difficult sort of period. And we've seen a range of different take-ups. Some customers that want payments waived for a period of time, some that just want to go to interest only, or some form of hybrid sort of in between. I will say the period is very, very uncertain, and will be interesting to see what future government arrangements are put in place. However, we, like others, have needed to increase our provisioning to ensure that we can cover off on any uncertainty that may exist for the future. Having said that, out of all of this, there comes some opportunity as well, and we've seen funding costs come down quite materially. The bank bill swap rates fallen. At the same time, we've seen the Reserve Bank of Australia provide opportunities for organisations like ours to take hold of some term funding at very cheap rates at 0.25%. So whilst we have some negatives in there, we've also got some positives. So uncertain, but we, I think, are navigating it okay.
I guess things are still uncertain because of COVID-19, but let's just focus on the opportunities and future growth. How can Auswide grow in this current tough climate?
So we were very successful with the first homeowner grant scheme, which the government put in place to encourage new purchasers, young people to buy new houses. Actually, not always young people, sometimes older people that buy their house for the first time. So we've been very successful on that and have enjoyed a good level of support through that particular package. We understand that that will also be renewed into the new year, so we're still waiting to get that confirmation, but we believe it will be renewed, so we'll be part of that again for the year ahead. We've also seen a stronger uptake of our home lending products via broker as we've continued to improve our service to brokers and to their customers. We've done a lot of work in terms of improving our turnaround times and our consistency and the support to those brokers, which seems to be attracting more brokers to consider Auswide, which is great. We've also been investing in our brand. And for some of your listeners, they may know that we are the main sponsor for Queensland Rugby League and the Maroons, which has lifted our brand awareness quite significantly, particularly in Queensland. So we're continuing to work with QRL, Queensland Rugby League, on a range of initiatives there as well. Finally, we have a range of partnerships that we've been building, platforms, and also others that want to take advantage of our capital and our funding capability and our products, and that's providing some exciting growth opportunities for us as well.
Well, good luck with the state of origin. But just finally, investors are flocking to companies who remain able to pay their dividends. And you've been growing your dividends for some time now. So how does Auswide stand in regard to APRA changing the capital management and dividend guidelines?
That's a great question, Jessica, because unlike any time that I can recall in my banking career, we've seen the regulator for banks write to all the banks and say, look, you need to be prudent with your capital, which we agree with, but you need to consult with us in relation to any dividend payments that you expect or want to make over the period ahead. So all I can say there is that we remain strong from a capital perspective, and we believe that we have a case for dividend payments. So we'll work with the regulator to try to make sure that we can pay a dividend out to our shareholders this year. But that will ultimately be a decision that the regulator will need to make.
Auswide CEO Martin Barrett, thank you so much for your time.
Thank you very much, Jessica.
And thank you for watching. For more information about Auswide, head over to Bell Potter's website or contact your advisor.